Hey everybody, my name is Dr. Brian Winrow. I'm a tax attorney and tax professor, and this video will cover the fourth of the four deductions that were created under the One Big Beautiful Bill Act. So what I'll be talking about in this specific video is going to be the deduction for those that are 65 or older, which provides an additional $6,000 deduction. So in this video, I will go ahead and walk you through the eligibility requirements, including the income thresholds and the requirements of reduction if your modified adjusted gross income exceeds the income thresholds. So let's go ahead and look at these requirements so that way you know whether you qualify. So let's look at the eligibility requirements. First thing is the age requirement. Since this is for seniors, of course, you have to be classified as a senior, so you're going to have to be at least 65 years of age. All right, and you have to have a social security number. So if you're 62, maybe you're claiming social security. Hey, that's okay, but you can't take this additional deduction. It is 65 years or older. So that's the first requirement. Then the second thing is, well, how much is this deduction? Well, you can take a maximum of $6,000 for yourself. And then if you're married, filing jointly, your spouse can take an additional $6,000. So between the two of you, for a household, a married household, it would be $12,000, assuming that both spouses qualify. So there's a maximum of $12,000 for those that are filing jointly. For a single, it's going to be just $6,000. Now, like all the other new deductions under the One Big Beautiful Bill Act, there are income phase-out amounts. Now, this one's even lower than the others that we've talked about. So far, we've been talking about $150,000 to $300,000, depending if you're married filing jointly. In terms of our tips and our overtime, we reduced down to a $100,000 single, $200,000 when we looked at the car interest deduction. And now what we're down to is $75,000 single, $150,000 for married filing jointly. So there's a phase-out amount. Now, what happens if you make too much money and you phase out, right? So your modified adjusted gross income exceeds the $75,000 or $150,000 requirement. Well, what the bill says is it's going to have a 6% reduction by the amount that you're over the phase-out. Okay, so a 6% reduction by the amount that you exceed the phase-out amount, the starting phase-out amount. So let's look at an example for you. We've got Jordan, a single taxpayer, age 65. So we know Jordan's qualifying, assuming they have a social security number. So we need to make sure Jordan has that social security number. I didn't add that in this question, but that is a requirement. Has a modified adjusted gross income of $88,000. So we're single, $88,000. Well, the phase-out starts out at $75,000. So if we go to 88, if we subtract $88,000 minus the phase-out starting amount of $75,000, that's $13,000. So Jordan exceeds the phase-out amount by $13,000. So what the code tells us is we need to go ahead and we need to provide a 6% reduction to that excess, that $13,000 amount, the excess amount of $13,000. So what we'll do is take $13,000 times 6%. That gives us $780. So instead of getting the full $6,000, which is the individual for a single $6,000, we're going to go ahead and we're going to subtract it out by $780. So the allowable maximum for Jordan is going to be $5,220 for this specific deduction. That's the requirements that you follow, that you have to follow in order to make sure that you're eligible for this deduction for seniors. Okay, so if your income is within that threshold, make sure that you're doing these calculations. Otherwise, if you were, say, Jordan was only making $60,000 of modified adjusted gross income, then we'd have gotten the full amount. We wouldn't have to worry about the 6% phase-out reduction. All right. Well, I hope that helps as you've gone through these. If it's helped, go ahead and subscribe to this channel. I will also be working on a video that walks you through all four different sections and how they apply on the 1040, where you see them on the 1040 to Schedule 1A, those types of requirements. So stay tuned for that. All right. Thank you for watching.